Okay, if you are looking for just pure, unadulterated excitement, I mean real volatility, and maybe the potential for these absolutely seismic price swings, you have to be looking at the biotechnology sector right now.
Oh, absolutely. This market doesn't just move, sometimes it just, well, erupts.
It really does.
And that volatility, that eruption, is exactly why we wanted to do this rapid-fire deep dive today.
Yeah.
Our mission really is to analyze the top 3 high-volume stocks we saw in biotech. These are all trading above $10 based on the close September 22nd. We're talking MBX Biosciences, Metsera, and Moderna. So MBX, MTSR, and MRNA.
And we're not just reading off numbers here. We're aiming for an expert journalistic analysis, trying to unpack the real drivers behind these big moves.
Exactly. Fundamentals, technicals, valuation.
Yeah, and maybe most importantly, the news that's actually fueling all this volume. Right.
That's key in biotech. Plus, we thought we'd run some, let's call it dynamic paper money math, just to kind of illustrate the staggering outcomes you could see, hypothetically, writing just a single day's trade in this admittedly risky space.
Sounds good.
Now, before we dive right in, it's really crucial just to acknowledge the data itself. All figures, performance metrics, everything we discuss is from third-party sources as of that last close, September 22nd.
Right.
And it's purely for informational, educational purposes. This isn't investment advice. It's really an analysis of what happened in the market.
Got it. Okay, let's kick off with MBX Biosciences, ticker MBX. Now, this is the smallest of the 3 we're looking at today. Market cap around $671 million.
Relatively small here.
But it delivered the most explosive punch. This stock closed the day at $20 flat. That's a colossal 100% gain in one day.
Yeah.
From the previous close of $10.
Doubled. Just like that.
Doubled. On staggering volume 2, 28.2 million shares traded. That's just huge.
And the driver here is, well, it's the ultimate fuel for small cap biotech, isn't it? Clinical success.
The trial results.
Exactly. MBX announced positive phase 2 trial results for their drug, Canvuparatide. It's a once-weekly treatment they're developing for hypoparathyroidism.
And the data looked good.
It looked impressive, yeah. They reported a 63% responder rate at 12 weeks. And interestingly, that actually jumped quite a bit, up to 79% at the 6-month mark in the open-label extension part of the study.
Wow, okay. That's obviously huge validation for the drug itself. But here's where the market dynamics get kind of interesting, right? The company immediately turns around and announces a proposed public offering, like right after dropping this fantastic news. Doesn't that seem risky? Like you might undercut the massive gain you just got by diluting shares right away?
It might seem counterintuitive, but it's actually a pretty textbook maneuver in this space. It's driven by, well, both desperation and opportunity, you could say.
Yes.
For a clinical stage company like MBX, cash is everything. It's their runway. If you look at their financials, they have an extremely high quick ratio. It's 19.50.
Whoa, hold on, 19.50. For listeners who maybe aren't balance sheet gurus, what does a quick ratio that high actually signify here?
It signifies massive immediate liquidity. Basically, the quick ratio is a tough test of how fast a company could pay its short-term bills using only its most liquid assets, like cash.
Okay.
So for MBX, having that cushion is vital. Because think about it, phase 3 trials, getting regulatory approval, that stuff burns massive amounts of cash for years.
Right, makes sense. Need the fuel.
Exactly. And they're also debt-free, which helps. They've got about $6.69 per share in cash on hand. So it puts them in a strong position, really, to fund that next very expensive stage.
Even though they're still deeply unprofitable, right? Income was negative $77 million.
Correct. Deeply unprofitable. PE/PS ratios. They're meaningless at this stage because sales are zero. It's all about the pipeline potential and the cash to get there.
Okay, so switching to the technical picture then. It sounds like euphoria mixed with, well, immense pressure. The RSI, the Relative Strength Index, is way up there at 72.82.
Which technically signals overbought.
Right. Normally a sell signal, maybe. But the real story here, reading between the lines, might be the short float, which you flagged at 23.72%. That's really high.
Exactly. That 100% jump in one day. It strongly suggests that the phenomenal trial news was basically the spark that ignited a monumental short squeeze.
The short's getting squeezed out.
You got it. You see that low historical beta, 0.38. That number usually suggests low volatility relative to the market.
Which clearly wasn't the case here.
Not at all. It's completely contradicted by this single day's action.
Yeah.
It confirms the move was almost purely news-driven and very likely amplified by panicked short sellers having to buy back shares at any price.
And the analysts are buying the story too.
Oh, yeah. Wildly optimistic, strong consensus recommendation of 1.0 that's basically a unanimous strong buy. And they've slapped a target price of $53.43 on it, way above where it closed, even after doubling.
Okay, let's try putting that crazy volatility into perspective with our paper money math. Yeah. Just hypothetically, imagine you decided to ride that wave. You invested, say, $10,000 at the previous close of $10 a share.
Okay, so $10 at 10 share.
They get you 1,000 shares on paper, right?
Yep, 1,000 share.
The profit on that single day, just holding it through the close at $20. A clean $10,000 profit. Your total paper value jumps to $20,000.
A 100% return in 24 hours. That's the binary gamble in biotech paying off big time.
Incredible. Though, important context. Those 1,000 shares are still just a tiny fraction, like 0.0006% of the actual 16.2 million share float.
A very small drop in a very big churning bucket that day.
Okay, so let's shift gears now. We went from that high-risk clinical gamble with MBX to a move driven by something much more certain, the M&A premium. Let's talk MTSR.
MTSR.
Okay, MTSR. MTSR. Now, this is a significantly larger company. Market cap around $5.6 billion.
Yeah, much bigger play.
And its jump, while not 100%, was still massive. Closed at $53.58, which was a spike of 60.80%. And also on heavy volume, 20 million shares.
And the reason for this massive spike? Confirmed M&A news. Pfizer announced plans to acquire MTSR.
Ah, the buyout.
The buyout for potentially up to $7.3 billion, though several reports mention around $4.9 billion as a core figure. The driver for Pfizer seems to be MTSR's next-generation obesity drug portfolio. They've got this monthly GLP-1RA program that's apparently very attractive.
Right, the obesity drug space is red hot.
Red hot. And this is, arguably the ultimate validation in the market. You're not just betting on trial success anymore. You're effectively betting on a confirmed payout from a giant like Pfizer.
And there's some important context here, too, isn't there? The MTSR is actually a pretty recent IPO. Didn't they just go public in January 2025?
That's right. Very recent. Huh. Which makes achieving this kind of valuation and getting snapped up by Pfizer so quickly, well, it's quite remarkable. Shows the speed things can move in the sector.
Okay, financially then, what stands out? You mentioned a high price-to-book ratio, 12.51.
Yeah, PB of 12.51, which is quite high, especially compared to MBX's 3.06, for context.
So why do we even care about PB if the company's being bought out? I mean, 12.51 sounds like Pfizer's paying a pretty penny. What's that tell us?
Well, it confirms the acquisition isn't really about buying existing assets on the books. It's about buying potential at a premium.
Right. Future value.
Exactly. PB measures market value against book value, basically assets minus liabilities. In biotech, especially with a deal like this, a high PB signals that the market, and now Pfizer, are valuing the company hugely based on its future pipeline, its intellectual property, not its current buildings or equipment.
Makes sense. And they're also debt-free.
Also debt-free, yeah.
Yeah.
And analysts project really strong earnings per share growth over the next 5 years, something like 32.52%. So the growth story was definitely there pre-acquisition.
Okay, technically, though. The stock looks like it's absolutely screaming overheating, doesn't it? RSI is even higher than MBX, up at 77.14.
Significantly overbought, technically speaking, which would normally suggest caution, especially for short-term traders.
But the acquisition news overrides that.
Pretty much, yeah. In this case, the fundamental event, the M&A announcement, is the dominant factor. You almost have to look past the short-term technicals here.
Because the deal sets a new floor, essentially.
Exactly. This event confirmed a major breakout. Look at the closing price, $53.58. It was actually sitting 13% above its previous 52-week high of $47.40.
Oh, interesting. Broke right through the old ceiling.
Right. And that kind of breakout, driven by concrete news like an acquisition, is a classic signal that the market believes the true, now somewhat guaranteed value is higher than even the previous market peak.
And the analysts agree again.
Yep. Consensus recommendation of 1.00 is strong buy. And their target price is $71. So even after that 60% jump, they think the final acquisition price or the value drivers mean there's still significant upside from the current trading price.
Okay, let's run the paper money math for MTSR too. Same scenario. $10,000 invested, but this time at the previous day's close of $33.32 per share.
All right, 10K at $33.32. That gets you fewer shares this time. Around 300 shares, roughly.
Okay, 300 shares. Holding those to the day's close at $53.58. What's the paper profit?
Paper profit on that $10K investment would be $6,074. Brings your total paper value up to $16,074.
Still a massive gain, obviously. 60% in a day is fantastic, but proportionally smaller than the MBX double-up. mainly because the starting share price was that much higher, so your $10 you bought fewer shares.
Precisely. Higher price, less leverage on the percentage gain for the same capital. Okay, third and final one. Let's turn to Moderna.
MRNA.
mRNA. Now, this is a whole different beast, right?
Yeah.
An entirely different class of volatility, maybe. It's the largest player by far in our selection today. Market cap over $10 billion.
$10.33 billion, yeah. Much more established.
It traded a lot of shares, too, 16 million. But the move was, well, pretty moderate compared to the others. Only a 5.23% gain for the day, closing at $26.56.
Relatively muted, yeah. So mRNA's price action feels like a lesson in market complexity. You've got good news fighting against some pretty serious headwinds.
That's a good way to put it.
On the one hand, the company had positive regulatory stuff, development milestones, FDA approval for their updated COVID-19 vaccine, some strong immune response data reported, progress in other areas like oncology, flu, RSV therapies.
A lot of positive catalysts on paper.
So why did all that seemingly good news only translate into a 5% gain on the day? What's pushing back?
Well, it seems to be structural resistance. Unlike the smaller guys like MBX or even MTSR, which can be driven by single internal events like trial data or M&A.
mRNA is bigger, more exposed.
Exactly. It's subjected to these massive external forces. So that positive clinical news flow, it's getting heavily counteracted by, well, global macroeconomic shifts. Specifically, the winding down of universal COVID recommendations and mandates. That directly impacts their primary, absolutely enormous revenue stream from the past few years.
Right, the COVID vaccine market is changing dramatically.
Dramatically. And then you layer on top of that, well, we have to acknowledge the highly polarized news flow surrounding their main products.
Yeah, that's unavoidable. Intense political resistance in some quarters, conflicting reports and discussions sourced from various outlets about vaccine efficacy, safety. It's a minefield.
It is. And how does that intense, often negative public discourse translate into market pressure? Well, it likely keeps a lid on institutional buying. It keeps the floor low.
Big funds stay wary in that kind of charged environment.
You'd imagine so. Plus, the company itself is dealing with profitability challenges now. Unlike the clinical stage guys, Moderna has significant sales over $3 billion, but they also carry a huge net loss right now, negative $2.9 billion.
Wow, that's a big loss.
It is. And that financial picture makes them more vulnerable to these external shocks we're talking about. If you look at their valuation ratios, like price to book 1.10 or price to sales 3.36, they're much lower than the smaller, high-growth clinical biotechs we just discussed.
So they're being valued more like a traditional challenged pharma company now, not a pure growth story.
That seems to be the shift, yes. More like an established but currently challenged large pharmaceutical entity.
Okay, technically then, the chart confirms this pressure.
It does. mRNA is clearly under long-term pressure. Performance over the past year, dismal, down almost 62%.
Ouch.
And the stock closed yesterday still nearly 61% below its 52-week high. The RSI is pretty neutral, 55.43, so that 5% gain we saw. It wasn't some sudden momentum breakout. It felt more like a slow grind upward against the prevailing negative sentiment.
Fighting against the weight of the market.
Pretty much. And what's maybe most significant technically here is the beta. It's 2.00.
In mRNAs in the S&P 500, right?
Correct. So a beta of 2.00 means theoretically it's twice as volatile as the broader market index it's part of.
Yeah.
That just amplifies the impact of all those headwinds we mentioned. Good news doesn't lift it as much. Bad news might hit it harder.
And analysts reflect this caution.
They do. The consensus recommendation is 2.89. That's significantly worse than the strong buys for MBX and MTSR. 2.89 leans more towards a hold, maybe even underperform, depending on the scale used. Although, interestingly, their average target price is still way up at $43.37. So they see potential value eventually, maybe, but aren't recommending piling in right now.
Fascinating divergence. Okay, paper money math for mRNA, just to complete the picture. $10,000 invested at the previous close, which, based on the 5.23% gain, would have been around $25.24 per share.
Right, so $10K at $25.24 gets you approximately 396 shares.
396 shares. Yeah. And the total paper profit on those for the day with that 5% gain.
Much smaller, as you'd expect. Total profit, $517.76, bringing the total paper value to $10,517.76.
So, still positive, but the proportional gain is tiny compared to the others. It really reflects the difference in movement for a larger company where, like you said, positive internal news is just constantly battling these massive external structural headwinds.
Exactly. So if we try to synthesize all this, look at the big picture. This massive disparity in performance we saw on the same day, 100% for MBX, 60% for MTSR, just 5% for mRNA. It really tells you almost everything you need to know about the different risk profiles and drivers active in the biotech sector right now.
Right. It tells us that for those smaller clinical stage companies like MBX, these binary news events like really positive phase 2 data, they can completely override traditional fundamentals. It becomes a pure high-stakes gamble on the science.
And potentially amplified by market mechanics, like that short squeeze potential with the high short float.
Definitely. Then you have MTSR, which perfectly demonstrates the M&A premium.
Yeah, the minute that acquisition gets announced, the valuation framework just shifts instantaneously. The stock blows past its old 52-week high because the M&A price provides a new, much more concrete valuation anchor.
And that overrides other potential negatives, like maybe a historically high price-to-book ratio.
Absolutely. The deal becomes the dominant reality.
And finally, mRNA. It really highlights the structural challenges, the market complexity for the bigger players.
It shows that positive clinical news or regulatory wins, while they're obviously necessary, they might not be sufficient to drive huge gains when the company is facing these powerful systemic headwinds.
Things like macroeconomic shifts affecting revenue, or that highly polarized political and media environment surrounding their core products. You have to factor in that whole external environment when you're looking at the established giants.
I couldn't have said it better.
So the key lesson here for you, the listener, might be this. The biotechnology sector is often defined by these incredibly sharp binary outcomes. We saw firsthand, just looking at one day's action, how positive trial data or a sudden buyout can, at least on paper, generate a profit of $10,000 on a $10,000 investment like we saw with MBX. Incredible potential, but obviously high risk.
Absolutely. And, thinking about MTSR again, here's a company focused on that booming obesity market. It was a very recent IPO, January 2025, and it's already being acquired for billions just months later.
Yeah, that timeline is striking.
It really is. And it raises, I think, a critical question, maybe provocative thought for long-term strategists looking at this space. In a sector where M&A is such a powerful, almost guaranteed driver of value for successful pipelines, how often does the goal for a successful biotech effectively shift? Does it move away from the long, slow path of achieving sustainable profitability on its own?
And towards just becoming a highly desirable acquisition target as quickly as possible.
Exactly. Is the end game more often acquisition than independence? And if so, what does that really mean for how you should assess new biotech IPOs hitting the market? Are you investing in a future standalone company or a future acquisition candidate?
That is a really fascinating strategic question to mull over. Definitely changes how you might look at the long game in biotech.
Well, we hope this deep dive into these massive movers in the biotech sector has given you some clear analytical layers, some things to consider for whatever your own next field of interest might be. Stay curious.